I want to welcome everyone back to another episode of Generation Investors Podcast. And I'm the one, the only Coach Flo. And how many of you are looking to supplement your income? I know I am. How many of you are looking for passive income? I know I am. And hopefully you are too. And by the end of this episode, hopefully you can consider yourself becoming a next generation investor. And beyond that, hopefully that I encourage and inspire you to start your financial journey today. And so I want to share with you five ETFs that I've been researching, 5 ETFs that is very diverse, and 5 ETFs that has major growth potential. And before you leave, I want to leave you with some takeaways, aka life applications that will continue to inspire you on this financial journey. And the first one we want to talk about is VNQ. That's right, VNQ is a REIT ETF. That's right, a REIT ETF. And you saying, Coach Flo, what in the world is a REIT? I'm glad you asked. It's a real estate investment trust. And these ETF, this one has companies like Welltower, American Tower, Public Storage, Realty Income, ticker symbol O. You already know what time it is. With these particular companies, they all have in common is real estate property. You don't want to have a tenant, if you don't want to have to go back and forth and keep up with maintenance with real commercial, real residential property, this is the way to get into any type of real estate. VNQ, that's right. And with these companies like Realty Income, Public Storage, they're always, and I do mean always, is going to pay a dividend. And this one right here will give you that dividend. VNQ. Let's talk about SMH. And I ain't talking about shaking my head. I'm talking about the semiconductor ETF. And with the way AI is heading, NVIDIA, Taiwan Semi, Broadcom, and Microtech, just to name a few, are in this particular ETF. The semiconductors will be on the move, yes, this year, because we're going to need the data centers. We're going to need so much energy to power up these data centers. The microchips, the AI chips, I'm talking about SMH is looking to really knock this thing out the park with AI really hitting hard this year. And so definitely do your research, do your homework. But let's move on to VIG. That's right. This right here has Broadcom. This one has Microsoft. JP Morgan. I'm talking about the bank Chase, Visa, and yes, Walmart, because everybody shops there. VIG has growth potential because of the wide range sectors that it holds in its ETF. And when you're looking for growth, and if you're looking for growth, I think this one will really help those who are looking to start investing, especially all my new beginning investors, especially if you haven't started and if you're thinking about starting. VIG is the one to really start to either a fractional share, especially if you don't have the funds. You say, Coach Flo, I got a lot of expenses. I got bills being due. I got daycare. I got rent or mortgage, car payments. So like I've said, and I'm going to continue to say, you can fractional share today. That's right. Fractional share today, whether that's $1, whether that's $5, $10, 50, 100 or more. You have to do what's best for you. You have to do what's best for you. In this investment journey, there's no one size fit all. There's no one size fit all. Everybody's strategy is different. Financial freedom. Your strategy is different from mine. Mine is different from yours. So you always have to do what's best for you. And remember to do your due diligence. Do your homework. Do your research. Because there is so many different type of gurus out here and these courses they trying to throw at you, and you take my course and you can make this money by this type of time and all that. And it sounds good, but in reality, you can make your money with whatever ETF, with whatever stock, whatever crypto. You just have to know, okay, what is going to best suit you in your financial goal, whatever that goal looks like. Let's move on to JEPI. JEPI is tied with the tech, healthcare, industrials, financial systems. JEPI is also a quarter paying dividend stock. That's right, a quarter paying dividend ETF that has, just so much potential, so much growth within this particular ETF. Definitely JEPI. That is another one that I want to continue to add to my portfolio. Buy, whether that's 1 share, 2 shares, just over time, add more shares. And with the way things are heading, this one right here and this next ETF, VDE Energy, has Exxon, has Chevron, ConocoPhillips, just to say the least. VDE, with the way things are heading, especially in this year, and the news lately with President Trump invading Venezuela and all that going on over there, VDE and any other oil stock is looking to do well this year, because energy, we're going to need, and we always need energy, but specifically this year, when you got these wars, energy and oil stocks and oil companies tend to really rise up to the occasion. So you have enjoyed this portion right here, or stayed towards this portion. You know I got to leave you with the bonus. I got to leave you with takeaways, life applications, because in this financial journey, diversification is key. Diversification is key to investing. And you're saying, Coach Flo, what is diversification? I'm glad you asked, because diversification keeps the boat balanced. It keeps your portfolio balanced. With so much news going on with different sectors, whether it's financials, whether it's energy, whether it's tech, whether it's healthcare, diversification keeps the playing field level. So if one sector goes down, the other sector goes up. It's typically, depending on your ETF that you have, it balances it out, because these ETFs have percentages of different types of companies, percentages of whether that's the tech sector, whether that's healthcare, whether that's financials. All these ETFs have not just the dividend, but it has that diversification key that will keep your portfolio from really losing money. And on the caveat or the flip side, if tech or healthcare or just a multitude of different companies are doing well, 9 times out of 10, your portfolio is going to sky. It's going to go. And what I like about these ETFs, besides the diversification, you got to have a long-term mindset. Okay, long-term appreciation and growth will take your money or capital to the next level. That's right, long-term, not short-term. You got to have a long-term mindset with these plays, or just investing in general. Long-term appreciation and growth, because if you're looking for growth and if you're really looking for appreciation, you got to buy these plays at certain prices. Okay, you got to be able to willing to hold these plays, hold these stocks, hold these assets for some time, whether that's months, whether it's years, whether it's decades. But over time, if you are in the right play, you're in the right stock, your portfolio and your stock will generate a ROI, a higher ROI, typically, if you play the long game. And then there's the monthly dividend income. A lot of people who've been invested for years live off of dividends. And hopefully you, let me know in the comment below, do you plan to live off of dividends? Would you like to live off of dividends? And put in new money. That's right. In the chat, put in new money. So these monthly dividend income will fund your lifestyle, okay? For those who are long-term, like I said earlier, long-term wins every time. In the end, if you have a long-term mindset, you're going to win. You're going to win, and at the end, you'll be able to say, you know what? I really was disciplined. I really was consistent. Regardless of these ups and downs in the market, I was able to put my money into these plays, into these assets, and let my money make me money. And in the end, I was able to pass on to the next generation, because that's what you call generational wealth. So if you have enjoyed this episode, smash that thumbs up, hit that like, hit that subscribe, and I'll see you in the next one.